Okay, hello traders, this is the Wolf with another tutorial video in the trend series, and in this video we're going to talk a bit more about trend surfing and how to understand the trend and trend behavior. So we'll continue where we left off in the previous video, but before that let me do the risk warning. Your invested capital may be at risk. Do not trade with money you cannot afford to lose, and this video is not an investment advice. Okay, I'm not going to repeat whatever we spoke about in the previous video, and let's get straight to the topic. The topic is trend surfing. I already did an introduction, and in this video we're going to talk a bit more about trend. So when we talk about the market, okay, the market always forms trends. If you do not know what a trend is actually a direction, the direction of the market which flows in a certain direction. Or in an uptrend, I like to call it surfing. In downtrend, I like to call it skiing. So normally when you open the chart, right, first you need to understand the direction of the market, or which direction the market is currently heading at the moment, and to be able to help you to understand this, okay, that is the reason why the BB lines and the EMAs are there. Okay, if you're not going to use them to help you understand the bigger picture and the market, then do not waste time putting in those indicators. You can just do whatever you wish on a naked chart. Okay, but trust me, naked chart alone doesn't help you understand the market and the bigger picture. Okay, so you need to understand this. Okay, and always, what I always say and what I always believe in is the best trend wave or skiing wave. The best waves is always after a major, pre-long trend reversal. Okay, or the start of the new major or minor trend. Okay, that are the best trend waves to actually do your trades. Okay, so currently we're on the Tuesday AUD CAD market, and we're going to talk a bit more about how to understand this behavior. And in order to understand trend behavior, first you need to understand support and resistance, like what I've covered before, and market pressure. So when you understand these two elements of price action, these two elements will really help you to take high probability good trades. Okay, just these two elements alone is very powerful to help in your understanding of price action. Okay, and what I would like to say to all those watching the video, and especially those newbie traders, amateur traders who still have no idea what the hell is going on in the market, I just want to tell you this. Okay, firstly, in order for you to understand how to trade, it's very important for you to understand what not to do and where not to trade. Okay, listen to me carefully. This will definitely change your trading as long as you stop trading in market condition or areas where you're not supposed to trade, and by knowing where not to trade and what not to do. When you understand what and when and where not to trade, then what to do, where to do, how to do becomes a whole lot easier to execute and understand price action. Okay, remember this. And let me tell you another key point. Okay, stop being a rejection trader. Okay, just trading on rejection alone will kill you. Trust me, it will kill you faster than, it's the fastest way to suicide if you are just going to be a rejection trader. And what do I mean by rejection trader? Do not just take trades blindly based on rejection without understanding the bigger picture and price action. Okay, and current price action, respect, and all these kind of things. You need to understand this. Do not be a rejection trader. Okay, there's a lot of YouTube videos out there which is killing, I would say killing a lot of newbie traders, and it hurts me to see all this kind of nonsense that a lot of newbie traders are falling prey to. Okay, so change your mindset, change the way you look at the market, change how you approach the market and things like that. And the very first thing is stop being a rejection trader without understanding price action. Just because a candle rejects doesn't mean it will follow the direction in which the rejection comes from. Okay, so currently now we are in a downtrend. Okay, and secondly, you need to also understand what is the meaning of a breakout. Okay, a breakout is when a key level is broken and the market is choosing to make the price go in that direction for an indefinite amount of time. Okay, and when you have the BBs and the EMAs in place, this will help you to actually understand price behavior a whole lot better than what you think you can actually understand from the live market. And there is a way to use candlestick momentum. Okay, do not blindly just after a red you think the next candle will be a red, or after a green the next candle will be a green. Okay, so the most important thing is current price action respect. You need to find good key levels based on current price action respect and what price is trying to do at the moment. So you can see the market is kind of messy today, but I will still explain the concept to you guys. Okay, so the EMAs just opened up into a downtrend, and you can see the distance is getting wider, which shows that we are in a major downtrend. But that doesn't mean that the market will only go down. It can also have green candles, bullish candles, retrace candles, reversal candles, and all those other stuff. Okay, so looking at price action, you can see that based on current price action, this level is a good key level and a good zone. And like I explained in the SNR series how to plot key levels, how to understand key levels, and it's very important to understand behavior. So let me talk about what you shouldn't do when you're trend surfing. Okay, the best way always is at the start of a new trend, and you can see the new trend started here, and we have 4 green candles in a bullish movement. Okay, so what you need to understand. Okay, let me just plot the level first, then I can explain to you okay what's going on. So the market goes down till this level. Okay, from here it's slowly lining up, and then the breakout wave comes through this huge bearish candle, continuation, and then you have a green candle pullback, continuation, pullback, breakout, pullback, breakout till this point. Okay, so now currently, very simple. When you see the EMAs and BBs pointing downwards, 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 it means the market is in a downtrend. Simple as that. The market is in a downtrend. Okay, so first of all, let me give you some tips. Okay, first of all, when you're going to trade, first you need to understand direction of the market. Then you need to understand, you need to make a decision. Okay, if you are going to stick to put trades or stick to call trades. For a newbie, for an amateur trader, this will be the best advice I can give you. Do not confuse yourself by trying to understand the bigger picture immediately, or just because the market changes direction, you go with the call option or higher option, and then when it goes down, you go with the red option, lower option. No, make a decision if you're going to do call trades or put trades. Simple as that. If you're going to do call trades when the market is in a downtrend, you don't do anything. You just wait and wait and wait and wait till the trend changes, till you start to see uptrend behavior. Till then, you just wait. If you're going to do put trades, then you just stick to lower options, or following the bearish movement, you just wait for downtrends, and that's it. Okay, so the market always behaves, is only two ways. It's either trending or it goes into ranging. Ranging is actually kind of like consolidation, which is market usually moves from BB2 to BB2 in a ranging market, or BB1 to BB1 in a ranging market, or in a trending market, the price in an uptrend will be inside here from the middle BB upwards. Usually strong trends is above the BB1 upper and the BB2 upper. So you need to understand that these lines are there for a reason, and you can also use it as support and resistance, but like I always say, you cannot just use it blindly. So we have a downtrend, we have a pullback till this level, okay, which is like a neckline. So in order for an uptrend to be in a breakout, it has to clear this level. Let me explain to you. Okay, in this topic today, I just want to focus more on what you shouldn't do rather than what you should do. Okay, when I say what you shouldn't do, hopefully whatever I'm explaining to you in this tutorial video will help you to save your OTMs or out of the money, and save you from doing bad trades. Okay, so you need to understand what not to do. Okay, and what not to do. Okay, for example, we have this round number here. Okay, so what not to do. The EMAs are pointing down, everything is pointing down. So what not to do? Now the market is reversing. So what not to do? So you need to understand the previous trend is actually in a downward direction. So what not to do? Okay. This BB1 lower, you can see this candle broke, fake breakout, come back in, respecting this BB1. When the market is inside here, it is still in a downtrend. So you can see respect again, and then the BB1 is getting flatter. Okay, this one breakout, this one, this candle, continuation up. Okay, so first crossing of the BB1 and the BB2, for example, in a downtrend, this first crossing, that means pullback, this candle opens at BB1, opens below the BB1, goes up. When the price is at this area, do not do a call trade blindly. So this is the area that you have to don't trade, avoid, and wait. Second, BB1 lower. This is another area where you have to be careful. And so, for example, this candle breaks. Do not take this trade. Do not take this trade because previous behavior already shows you that the BB1 lower has current price action respect. Okay, even though it's a green, and then you shouldn't be sad or cry or oh shit, I should have, oh damn, I should have taken this call. No. Okay, no. If it's a green, so be it. Okay, so once you have the confirmation, then you can use it because you already see current price action respect. And when price touches the level, so this candle started bearish, touches this level, and there is a change of polarity, change of direction. So this level actually now becomes acting as a support. And you know, once you have this, the uptrend or the upsurge is probably started. Okay, and then it goes into this zone which you have already plotted. So when you're in this zone, you already know the direction of the market is up because of this 1, 2, 3. Do not take any trade or call trade or put trade trying to follow the downtrend when the market is already shifting, the BBs are already turning flat, which shows that market is now in ranging. So you have the high and you have the low of this zone. So when price enters this zone, you wait for confirmation. And another area to avoid is near the EMAs, because this is the area where fake breakouts happen. This is the area where price can fail. So like for example, now you have this inverted hammer and then this candle tries to break out. No, you do not take this candle into a call trade. No, 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 no call trade here, because this is where, although it looks like a breakout, it could be a fake breakout, and this could be a bearish candle. So you need to understand when you're following the trend and following the wave, you need to be aware of these danger zones. Okay, and candle breaks a level, you need retest confirmation showing you pressure and strong movement in the candle to show you the direction of the market. And like I always say, failure shows you direction. So what you're looking for when you're looking at an uptrend, you need to see bearish failure. You need to look for bearish weakness. If you're trading a downtrend, you're skiing a downtrend, you need to look for bullish failure, bullish weakness. Then you can continue following the trend. Okay, I hope I make myself clear. And in this video, I'm just going to explain this concept to you and these things to you, because this is very important for you to understand the market direction. When you know what not to do, what to do becomes so much more clearer and easier. So, trend behavior. Always you have a impulse wave and a corrective wave or pullback wave, or in layman terms you can call it a breakout wave or momentum wave followed by a pullback wave, and then you hit a trigger point which triggers the next breakout wave or momentum wave, and then the next pullback, and then breakout wave, momentum wave. So you need to understand the difference from a strong trend, healthy trend, not so good trend. Okay, like for example over here, current price action. It shows you red, green, kind of behavior. So even though the market direction is up, you can see this behavior. This behavior is actually consolidation behavior. When you see red, green, it's consolidation behavior. And when you see, and why are you having this red, green behavior? And you can see, even though it looks green, you see it's turning red. And why do you have this behavior? Usually this kind of behavior happens in between EMAs. So over here you have the 20 in between the 50. So market is consolidating, and then now you have the 100 and the 50 and the 20. So you need to be careful of where the price is in relation to the market. I hope you guys understand what I'm talking about. And these are the kind of areas where the trend may reverse. Please understand that I'm using the word may reverse, because whether it reverses or not is not for you to say. Your job as a trader is to follow the market. To follow the market, to wait for the right confirmation, and then you take your trade. So in an uptrend, you need to use support to help you take your call trade or higher trade. And in a downtrend, use resistance to help you do your put trade. Okay, so I hope you guys are clear on what I'm trying to explain to you guys. And behavior. So you can see the market is now in between the BB2 upper and the BB1 upper, which shows uptrend behavior. But you can see the market is still ranging. So you cannot just blindly do call trades or put trades without price action confirmation of support and resistance in relation with pressure. And the pressure is the one that shows you the direction of the market. So I hope I'm clear in the second tutorial video, because trend surfing is a very deep subject where you need to understand everything together, and that's when you will understand the price action. How do you take good trades with the trend? Okay, so you can see now market is trying to shift to an uptrend, but you need to understand when the trend direction changes, it doesn't just go up all the way. You will have pullbacks. So observing the behavior is very important. So like for example, you have a 4 candle and then a 2 candle pullback, and then you have a 5 candle, and then it starts to 1 red, 1 green, 1 red, 1 green, 1 red, 1 green, and then you can see the market is now trying to go higher. So where the market is rejecting from, you can see the live candle behavior to spot the price action levels, but that doesn't mean you take a reversal trade. As you can see, the market is clearly wanting to go up, and your job is to follow the market. If the market wants to go up, don't expect it to go down. If you want it to go down, then you need a proper confirmation, and a proper confirmation is not rejection. Please stop being a rejection trader. Understand price action together. Okay, so with this, I'd like to end the tutorial video. I hope you understand a bit more about what you shouldn't do when you are trying to understand the market and follow the trend. And when you understand what not to do, what to do becomes a whole lot easier for you to execute. So in the next video, today the market is not very nice, but definitely tradable, but not really strong trend for me to show you how the breakout happens. So always be aware of the danger zones, and you need to understand price action behavior around those levels. So spend more screen time, try to observe how the price behaves at key levels, and in order for you to understand how price behaves at key levels, first of all, you need to know how to identify, plot, and know what is a key level, and how to plot your key levels, and to understand that, oh, this is a key level. And from there, the way the price behaves at the level will show you a lot of things that can help you understand the trend direction. Okay, so let me just recollect what we've spoken about in this video. Always be careful of danger zones. You need to see a breakout. Okay, now we're having a breakout. Okay, market is still ranging. We have a 3 candle coming down, and you can see BB2 is pushing the price up. So in a ranging market, this is where the reversal can happen. So in order for you to follow the breakout wave, you need to be careful of retraces, and you need a confirmation that the market will continue to break down. Okay, and this is the danger zone. This is the SNR level. And the moment this breaks, doesn't mean you take a put trade immediately. You can see the price is still here. You need a retest confirmation, or you need to wait till the whole level clears. But you can see clearly the market direction is down at the moment. So probably another breakout wave. So I'll let the market run another few more candles before I end this tutorial video. And hopefully when I have time, the next video I'll make to help you understand this concept further. And you can see this is the danger zone. So this candle closed above into the zone, so there can always be a reversal or retrace, but you cannot just take a call trade blindly, because the pressure is down, the trend direction is down, and the SNR is up. What you want the pressure to be down and the SNR to be down. So when this clears, this is a down SNR. So you can see the market is still trying to go down. Breakout, this is the retest. Okay, which shows that we are going down. And I think I can get to show you a trade. A bit too late. And you must always be careful when the first candle breaks the BB2. The next candle is the retest candle of the BB2, which will confirm the strength if the price will continue down or not. Usually, sometimes you can have one candle break the BB2 and the next candle goes back into ranging market. So you just need to be careful of these kind of scenarios. And you have a strong breakout. Okay, hitting the support zone. Okay, so this candle you cannot do a call trade blindly. Most probably this will also be a bearish candle. So I hope this tutorial helps you to understand a bit more about price action and trend surfing. And in the next video, I will cover more and probably show you some live examples on how to surf or ski a trend. And with that, let a few more candles run before we end this tutorial video. We're currently having a breakout wave. Okay, so 1, 2, 3, 4, 5, 6. You see the BB2 is steep down. No signs of reversal. Okay, you have a gap up, which I do not like to trade, the gap up or gap down, because the price can always pull back. And when you have a trend and you have a gap, it shows a possible sign of a reversal or retrace candle. So you have to be careful of these kind of things too. Okay, so with this, I'd like to end this tutorial video.